Thanks for tuning in, Dividend Dashboard here, and welcome to another portfolio update. Every month, I like to showcase my portfolio in full transparency for my own progress, but also as inspiration for others who are starting out. In this type of videos, I like to cover a quick glance on my YouTube channel growth, the stocks I bought, dividends received, portfolio value, performance, holdings, and much more. I do all of this for free, and the best way to support my content is by liking, subscribing, and watching the video. So thank you in advance for being here and supporting a small creator. Now, let's dive into the September update. In terms of subscriber count, the growth is not as consistent as it looks. The spikes you see usually happens when I post a video and people subscribe. Now, not all videos that I post bring watch time or subscribers, so it feels like a gamble. However, having 1,566 subscribers feels crazy because that's a lot of people. I never imagined growing a YouTube channel to this magnitude and having hundreds of people watch my videos. I am grateful but not pleased. I believe I can continue growing the channel, so with that being said, I'm setting a goal with the subscriber count. By the end of this year, I am aiming to hit 2K subscribers. In order to achieve that, I will need to continue posting content that people enjoy on a consistent basis. Better topics, longer videos, and so on. So let's see how it goes. I got 3 months to achieve this. For September, I bought 2 companies, Nike and Google. Both tranches were bought purely with dividends received, as I am not contributing to the portfolio for the time being. I bought 0.18 shares of Nike just to do a dollar cost average on the holding. Nike has been struggling, losing market share to competition, especially in the running space. With the recent CEO change, I can see the company moving in a better direction. The new CEO is someone who has been with the company for around 3 decades, and he started as an intern. So he has seen the evolution of the company throughout time and understands more the business. For Google, I'm just increasing my position overall. Google is a core holding and I want to increase the allocation. Lately, it has been facing pressure from the DOJ due to monopolistic characteristics, but that doesn't concern me. Every revenue segment of this company is growing, so breaking the company in pieces, you will have several cash flowing machines. But for now, it remains together. When you have a company like Google that is doing amazing projects and continue to grow at a rapid pace, it is impossible for the DOJ to not hunt them. It's part of the business for being one of the largest companies in the world. Moving on, for the month of September, 10 companies paid me a dividend. We got Google with 62 cents, Johnson & Johnson, $8.74, Pepsi, $6.78, Digital Realty Trust, $9.29, Kroger, $5.59, Home Depot, $2.82, Waste Management, $3.12, Realty Income, $5.76, Visa, $2.46, and Hershey's, $19.43, for a total amount of $64.61 in dividends, which allow me to buy the companies mentioned for this month. September is one of the highest paying months in my portfolio, consistently growing at a double or triple digit pace so far. As contributions increase over time, so did the dividends reinvested, starting in 2020 with just $3.59 all the way to 2024 with $64.61. $64 is not enough to retire and live off dividends, but it can surely cover a part of a grocery or some meals. As time goes on, I expect this number to continue increasing. Moving on, I have a dividend stock portfolio valued at $23,817.94 with a weighted dividend yield of 2.81%, which translates to $548.82 in projected annual dividends. The portfolio remains at 23 holdings. Performance-wise, the portfolio is still heavy into low volatility defensiveness, and this limits the return of the portfolio. I'm slowly working on reducing that and opting for more total return. Overall, is all in the green, and year to date we are sitting at 13.32%. The 23 holdings in my portfolio are a combination of growth and defensiveness, but more heavy on the defensive side. This year I went heavy on increasing my allocation on Visa, MasterCard, and Google, which combined take around 15% of the portfolio. My current top 3 holdings by allocation is Hershey's with 11.48%, Starbucks 7.58%, and MasterCard 7.12%. Overall, this is a portfolio that in my opinion will do great in the long term, but I also keep in mind that there's room for improvement and optimization. Now we have the annual dividend per holding. I like to show this graph so you can appreciate the variety in amounts that every holding pays. Like in previous updates, Hershey and Realty Income pays a massive amount of dividends in this portfolio compared to other holdings. This year has been about high grading the portfolio, which means I want to be adding more high quality businesses. I already have Google, Visa, and MasterCard, so slowly but surely you will see those graphs going up. This is the year that Google started paying a dividend and they have tons of free cash flow, so I assume they will start increasing their dividend next year. Now, the total return of my holdings. This shows whether I'm in profits or losing money with every position. And as you can see, most of my positions are in profits. Only 3 of them are down, which is Johnson & Johnson, Hershey's, and Pepsi. It is not by a lot though. Pepsi and Johnson & Johnson are down by less than 1%, while Hershey is only down 9%. If you've been following my channel for a while, you might have seen the recovery I had with Hershey's, which at one point I was down around 18%. So it's been a slow but surely recovery. On the other hand, we have big winners like Apple with 100% gains, JP Morgan Chase with 75% gains, and Digital Realty Trust with 66% gains. Those are the top 3 winners, but overall I have tons of unrealized capital gains within the dividend portfolio. And as mentioned, this portfolio will do just fine in the future, but again, with room for improvement. That will be it for this video. Hit like, subscribe for more content like this, and I'll see you in the next one.